what did you make of it in the end?
Pretty good session in the end, and quite an unusual session. For most of the session we were underwater, but we really did make our ground back in the last half hour of trade. Just having a look at the intraday graph of the Australian share market, and you can see that it's in the last hour that we really saw a strong uptick in terms of the Australian market, and by the end of the session up by 0.1%. It did look like there was a big buyer in the market just buying the general market, because we saw the banking space up in the last hour of trade, we saw consumer staples with a tick up, we saw the energy space with a tick up. So it does look like it was index buying, which did drive that gain that we saw. And if we have a look at the Aussie dollar, we did see the Aussie dollar moving down, and if it was international involvement, you'd expect that international buyer of shares to be also buying Aussie dollars. So it doesn't look like it was overseas participation, but it does look like it was domestic index buying, which actually drove the Australian market up in the last hour of trade. Of course, the focus in today's session was all about the HSBC PMI numbers out of China. The number, of course, coming in weaker than expected at 49.2. But it was a case of bad news being good news, with hopes of more stimulus coming through from China, actually helping stocks around the region, and by the end of the session, helping the Australian market as well. But I think locally, we're also very much focused on the Reserve Bank meeting in May, and there are growing expectations that we could see an interest rate hold decision in the month of May. I mean, one of the factors is the fact that we've seen iron ore prices now jumping back very strongly, up by 15% since the lows that we saw in April. So the fact that we are starting to see some support in terms of that sector, which is doing it really tough in terms of the Australian economy, behind a lot of expectations that we will see the Reserve Bank remaining on hold. NAB, the latest, to come out to say that they do expect rates to be on hold in the month of May. On the flip side, iron ore stocks, an absolute stellar day. Lots and lots of short covering happening, given that this is one of the highly shorted areas on the market. Fortescue, the sixth most shorted stock on the market, it had 11.7% of stocks shorted in the latest ASIC short selling report. And if we have a look at Fortescue today, up by 9.7%. BCI doing it.
Out there at the moment, wondering whether or not now is the time to start, slowly getting back in, nibbling away at the iron ore plays. Your own thoughts?
Well, I started buying into iron ore stocks today for a couple of reasons. First of all, I guess the key with buying stocks is to try and figure out what's going to be the case in 18 months from now. China showed determination in terms of stimulus, that it's going to continue to invest in terms of infrastructure and unleashing liquidity in terms of the Chinese economy. And also, if you have a look at Fortescue today, they tried to raise $1.5 billion in the bond market. They managed to raise $2.3 billion there, so positive in terms of that bond offering. And then thirdly, if you have a look at the charts, positive divergence. So Rio Tinto, looking at the relative strength index versus share price action, we are seeing positive divergence there. So altogether, some of the stars lining up for iron ore. It has been a very volatile space to be in, so it is probably more for someone with a strong stomach for that volatility, but altogether things looking a lot better than they have in a number of months.
Some more equal than others, though, in terms of that iron ore space?
Well, I think it does depend on your risk tolerance. There are still a number of iron ore miners underwater even at this price, but I guess the ones with the highest amount of leverage are those smaller stocks. So as you see that iron ore price bounce, you are going to see those smaller iron ore miners being the key beneficiaries. But I think most people, if they're looking at a longer term investment, would be more happy with a BHP, Billiton or Rio Tinto. So it really does depend on your risk appetite. But of course, those stocks that are more highly leveraged to the iron ore price, like the BC Irons of the world, would be the ones that would be moving up more aggressively as that iron ore price recovers.
Mike, and secondly on what Mike was just finishing there with what it could mean for the near-term price direction?
It's great news for Fortescue. Remember, the reason behind this bond offering is to buy back its 2017 and 2018 senior unsecured debt, which is a more expensive debt, and replace it with cheaper secured debt. Not only that, it's managed to take out the maturity. So the previous debt would have expired in 2017 and 2018, and the market was a little bit worried about the nearer term debt. So it's extended the maturity profile of its debt position. So altogether, great news for Fortescue. But 9.75%, that was higher than that March offering, which said they did have to pull at 9%. But of course, if you compare it to BHP, I mean, it doesn't even compare. BHP, 3 tranches, the 2021 was the Euribor plus just 35 basis points. The 2022 maturity, 0.75%, so under 1%, and the 2030, 1.5%, as Michael mentions. But Fortescue, a great positive there, and the fact that so much of the stock is short sold, and we are starting to see a rebound in terms of iron ore. Good news for Fortescue.
Julia, what's your investment thesis, if you like, or perspective on BHP? Because we've had a few people come on in recent times say, look, you don't want to be there, it's not worth going. Further downside, I think Philippe Van Dijk was on last night saying wouldn't buy, to buy it it'd have to be around 20 cents.
I mean, BHP is a stock that I've been happy to trade the movements, but in terms of an investment thesis, remember a lot of that investment is going to be in oil, and it really does depend on whether you think the energy market has bottomed. I think we are seeing structural changes in terms of the energy market and where it's coming from. I mean, one of the interesting things I think that has come about is France, which is very reliant on nuclear energy, has said that buildings in its commercial zone, new buildings going up, they have to cover the roof with either solar panels or with a garden. So, I mean, these massive moves towards renewable energy, I think, is going to see a shift in terms of energy use and energy pricing over the next few decades. So I think that's a key to consider in terms of energy, and of course the shale gas revolution that we're seeing in the US. So BHP is not just an iron ore play, it's very much an energy play as well, and it's a stock that I'm happy to trade at the moment. But in terms of an investment portfolio, I'm probably looking at a more pure play for Rio Tinto, which I've added to the self-managed super fund portfolio today. But BHP I've been happy to trade in and out of in 2015.
Fantastic. And Julie, as you were saying, have had a great recent run, but today gave some of that back.
We did see some gold production reports coming out today. We saw Newcrest Mining, the biggest gold miner listed on the ASX, coming out with its quarterly numbers. We also saw Northern Star coming out. And these are two stocks that have performed fantastically well on the Australian share market. I know we talk about gold price a lot of the time and how the gold prices hasn't really moved too much. In fact, in the past year, we've seen gold prices in US dollar terms down by 8%. The key for these gold miners is actually what the Aussie dollar has done, and the Aussie dollar against the US currency is down 17%. That's been fantastic news for Australian producers in terms of the margins, and we've seen that reflected in the reports today. Newcrest Mining all-in costs around about 946 Australian dollar, average realised sale price of gold above 1,500. We're seeing the same type of thing, although a slightly smaller margin for Northern Star. Of course, both these gold miners down today, but that was because we did see the New York price lower overnight, and of course the Aussie dollar has remained relatively strong. So a lot of the story around these Aussie producers is around that Aussie currency, and if we do see strength in the Aussie currency, of course that's a negative for these miners.
Mike, much interest in the gold players? A stock you follow much, Julia?
I mean, GWA, in the morning we saw an increase in terms of the share price, but then by the end of the session it was down almost 1%. And this is a stock that's really missed out in that rally that we've seen in building material companies and building related companies. Now, they do building fixtures, so if you have a look at their kitchen and their bathrooms division, it makes up more than 90% of earnings. And in the year to date, some of these companies which are exposed to that housing area have done very well. Beacon Lighting's up 26%, Nick Scali's up by 27%, Adelaide Brighton's up by 27%, but GWA is actually down by 14%. Now, we know they've been selling assets, so there has been expectations around a capital return, which they've announced today, 22.8 cents, a special dividend of 6 cents. However, by the end of the session, the shares were down. So unfortunately, not a lot of support. I think this could be one of the late runners in terms of that residential housing story. So we haven't seen it run as yet, but it could be a late beneficiary to this story. Of course, they are competing against those cheaper imports. And when you're building a house and you're paying those contractors, and it's hard to find contractors, they're expensive, sometimes you cut corners and you find those cheaper bathroom taps and toilets, and unfortunately they come from offshore.